It is very important to know which ratios to quote in the exam paper or in a test. So you must read the question carefully to determine which ratios you have to do. Because if you use the wrong ratios, you're wasting time and you're not getting marks for it in any case. So if they ask you to calculate the profitability, or they can say calculate the operating efficiency of the business, then it means you're going to do these ones that you take out of the income statement. So you will take your gross profit percentage on sales, the gross profit percentage on cost of sales, operating income on sales, net profit on sales, and operating expenses. So anytime when they ask you to do a calculation and explain the profitability, this is the ratios that you will use. If they tell you to do show the solvency of the business in the question, it means you take your total assets to your total liabilities. So total assets will be your non-current assets plus the current assets. The total liabilities is your non-current liabilities plus your current liabilities. For liquidity, you will calculate the current ratio and the asset test ratio, and make sure that you understand exactly all the possible questions. Why is it too high? Why is the inventory? What can you do to decrease the inventory? How can you improve certain ratios? That you can do all of that. So remember, the difference between the current ratio and the asset test ratio is that you don't take inventory into account as part of your current assets. So this one is one that they always ask, to ask what is the difference between the current ratio and the asset test ratio, to show that because the asset test ratio is much lower than the current ratio, it means that you've got too much stock, and then you will have to try and get rid of some of the stock that you have. Okay, return to owners is how much money did the owners make out of this business, so the profit that they made. So you will work out the percentage return or the percentage profit on the average owner's equity, or they can ask you to work out what is the percentage profit on the owner's equity at the beginning of the period. So it means for return on average owner's equity, I take my capital balance at the beginning and the end of the year, and I divide it by 2 to get the average. Here I will only use the opening balance of my capital account. So these ratios will always be in exam papers and in tests. So make sure that you understand, go through the work several times, that you understand exactly what you have to do, where you have to do it, how can you make improvements, what is the problem, so that you will be able to do the analysis and interpret the information on the financial statements.